Good morning everyone. My name is Ram Dhamija. Welcome to my channel. I'm a full-time derivatives trader and an investor and a mutual fund distributor. I help people over here in this channel to understand the markets a bit. I present my views on the market and how the options markets is behaving, and I give a comprehensive outlook over the next week. What are the various factors to look out for? So today is 13th of July and it's a Sunday, and the past week that has gone by has been a slightly pressure week for the markets, wherein markets have gone down from 25,600 to about 25,100 odd at the close. And this has come on the backdrop of a huge rally that had started from April the 7th, when the markets actually were at 21,700. And from there it has been one-way straight rally, except for there was some period of consolidation around the 25,000 zone. But apart from that, it's just been spectacular to say the least. And no one had expected this rally. People were saying that the markets are not going to make an all-time high for the next 2 years when April 7th happened. And they said that 26,200 is very far away. But within 2 months we have made a new high, almost a new high I would say, and we have made a new high on banking and financials and a lot many other sectors, mutual funds, etc., which have already hit indices, which have already hit an all-time high during this period. So it's been quite eventful, and we during this time we have seen a lot of things happen. We saw geopolitical tension, we saw tariff wars, we have seen three major events happening, which usually do not happen in the geopolitical sphere, and a lot of news flow, a lot of heavy news flow every day. But we have been able to navigate all that, and almost we are at an all-time high. But having said that, there will always be small nuances here and there. The big question to ask is, have we made a top intermediate top now at 25,600, or does the market have more legs to go? So I will analyze that today in today's video. If you just a request, if you like my content, please do subscribe to my channel. And if anyone is interested in making a mutual fund portfolio or even evaluating your existing mutual fund portfolio, there is a link given in the description. Please kindly fill up that form, and I shall get in touch with you, and it's free of cost. There is no cost for making a mutual fund portfolio or evaluating a mutual fund portfolio. So I help clients build strong, robust, good mutual fund portfolios which take care of all the market cycles, and they protect you from downside, and they will hopefully be constructed in a way in which you will get the maximum upside benefit as well. So very strong, robust portfolio. So if anyone is interested, please fill up the mutual fund form, and I shall get in touch with you. So now let's begin our market summary for the week, and let's see where we are headed. So this is the Nifty chart on Friday. This is a 3-minute chart. As you can see that we started off over here somewhere around 25,286 odd, but after that there was a steady decline in the market. So we kind of went down, and it was one-way linear decline, and we closed at the low point of the day at 25,130. So it was a huge pressure on the market, which was building up for the last couple of days. So if you look at this is the Nifty one-day chart, and you can see over here these red candles that are forming. So there was some pressure on 10th and there was some pressure on 11th. So both Thursday and Friday the markets witnessed some pressure, but Friday we opened slightly gap down as well, and from there we just slid down. It was also something to do with the IT pack not performing and the results of TCS, and then basically the entire IT pack has been in trouble, and it has been taking the market down along with it, whereas financials have been kind of helping the markets stay afloat. So that has been the story. That was completely reverse of 2021, when IT was actually leading the bull run, and that was a time when new IPOs were coming out, and all these new age IPOs were coming out, and IT firms were not finding people to recruit, and So see how things change, how cycles change within 2-3 years time. Now banking at that point in time was not very loved sector. All the banks were not participating in the rally. But this time it's completely different, wherein banking sectors are making all-time highs, banking names are making all-time high, whereas IT is 30% down from the top. So if you look at big names like Infosys, TCS, etc., they are like anywhere between 20 to 30% down from the peak they created, while market is almost 4.5% down from all-time high, and Bank Nifty is already made all-time high 3 times. So that is how sectors change. That is how. So if you see over here, we were in this consolidation phase over here, as you can see, and this consolidation phase started from 12th of May and it remained till about 20th of June. So 1.5 months we were consolidating, and after that we actually had a breakout, and in this breakout we managed to go to 25,600. Now usually when such breakouts happen, they are not the end of the trend. Okay. However, we are in the consolidation zone. So over here you can see some sort of a consolidation happening in this zone. Now what will be interesting to see is this level, which is 24,800, because this is where this is the zone where we were consolidating in the last consolidation. So if we don't break 24,400 odd, which was the low that was made during the Iran-Israel conflict day, if you see over here, 13th of June, this was the low that was made. As long as this low holds, I think we are all good. It is actually basically, in my opinion, could be a good buying opportunity as well. But however, if this low is broken by the markets for whatever reason, if over here we go and break it, then this becomes a very, very important level. This is the low that was formed when the India-Pakistan war broke out. So 9th of May becomes very, very critical, and 3,900 becomes a very, very important level. So that should not be broken under any circumstance. But I don't think we possibly can go till there. In my opinion, 24,400 should act as a very, very strong support for the markets, and even before that there is one more support at 24,800. So as long as these two supports are holding, in my opinion, it could be a very good buying opportunity for all the people. And that is where I say, there's a famous saying in the markets that more money is lost waiting for a correction than the actual correction. So you would have seen it for yourself. If you were waiting after April 7th that okay, markets are going to correct more, I need some clarity, etc., then that typically never happens. So the best approach is to invest through systematic investment plans, SIPs, through mutual funds, and that is where I say that I help people make mutual fund portfolios, because I understand, having worked with so many clients, I understand how clients need hand holding, how they need support during times of crisis. And not only that, there's a structure to make the portfolio. So you should take advantage of dips in the market whenever they are, because if you are not investing in dips, then you are missing out on down days, and eventually that adds up over a long period of time. So if you're buying the market which is 1 to 2% lower or 3% lower during a dip, that gets added to your XIRR over a long period of time. So that typically will tend to give you 1 to 2% better returns, and there are a lot of studies to show that whenever you are deploying systematically in dips, it helps your overall performance. So you should look out for opportunities. So you should actually be happy if the market is going down, because it gives, for a long-term investor, it gives you the opportunity to build your portfolio in a very, very solid way. Otherwise, if the markets are going up like what we saw from April 7th onwards, there was no chance to enter the markets. Every day you come and markets are up 1 or 2%. So you feel like, you missed out. And then there's an anchoring bias that, no, okay, I thought of buying the markets at 21,900. Now the market is at 24,000. How can I buy? Now everyone who went out and bought at 24,000, 23,900, that was the India-Pakistan conflict, Iran-Israel conflict day, when markets were soft, would be in the money, would be making money. So that is where you should look if the fundamentals of your portfolio are fine, and if you know that the earnings of your companies are doing well, then you should go and invest, because whenever the markets are down, it gives you an opportunity. Now coming to how the OI is placed. Now this is the only worrying part. Okay, open interest is the only worrying part, if you ask me. So open interest is at 15 crore calls, as you can see over here, versus 8.2 crore puts, and 25,300 is where a lot of calls are written. Similarly, 25,400, 500. So they're huge, these skyscrapers that have been built at these levels. So until unless they are taken out, markets might be under pressure. So there's a 7 crore options difference between calls and puts. So that's indicating bearishness as we speak. So there might be some short-term pressure on the markets until unless this 0.54 goes up to 0.8, 0.9, and that will only happen on some good news. Otherwise, we might expect some pressure. Now let us look at where we are in terms of the sectoral indices from their all-time high. So this column F is showing you how much we are down from all-time high, and this column N shows you that how much we need to go up from these levels to reach the all-time high. So Nifty Bank, Private Bank, Fin Nifty are already making all-time high every day. That's why you're seeing them less than -2% from the top. Midcap had also made an all-time high, but midcap has corrected in the last couple of days, so it's at -3.4. Nifty is now at -4.2. It had gone to about -2.8, so there's some correction in that. Small cap is -5.78, hardly anything. Nifty next is -12.2. FMCG is -15.8. We saw some glimmer of hope in FMCG in a couple of days back. Realty is -15.5. IT is the one which is struggling, so -18.2. So you can see the difference between banking and IT, how it's playing out. Similarly, momentum is completely crushed. Momentum is only going to start in the next bull run, so it's at -20. So this is how the indices are stacked up, and this is the one major reason why we cracked. FII has sold very big amount at 5,100 crores on 11th of July. And this month they have actually sold -10,000 crores. Nothing to worry if you ask me. As of now, nothing to worry, because if you look at it over here, when they start selling, this is the sell. This is the actual sell when it happens. Look at October number, -1.14 lakh crores, -45,000 crores in November, -87,000 crores in January. So this is the selling, when you can really say that there is a selling that has started. So -10,000 crores is nothing as of now. But also another thing is only 10 days have passed in this month, so let's see. DIIs have been buying, so it's 12,400 crores for DII. Now let us come to interesting statistic. This is how the sectoral performances have been for equities. So if you look at, let's look at last 1 week, how last 1 week has panned out. So tech has been the worst performer, followed by midcap at -1. And what have been the best performers? International has done well, MNC and banking, no prizes for guessing. These have been doing really well. Now let us look at what has happened in 1 month. Again, tech is the worst at -2, PSU -1.8, midcap -0.6, and the best performing sectors have been consumption. As I said, FMCG had made some sort of a comeback. Pharma is at 1.2, so these have been the best performing sectors. And international at 2.77%. So that has been the best performing. So you can see international is at best performing. Now let us look at how commodities, gold and silver, have performed over the last 1 month. So silver is up 4%. So you can see silver is performed really well over the last 3 months. Last 3 months it is up 17%. Last 1 year it is up 18%. So silver is catching up with gold. Gold last year 1 year performance has been 31%, but silver is now catching up. So as I maintained, gold and silver provide a good hedge for your portfolio and should be there. In percentages, it should not exceed a certain percentage in your portfolio. Like silver should not be more than 3% in my opinion, and gold should not. Gold can be 10-15%, but not more than that. Now coming to the debt, how the debt has performed. So what has been the best performing debt in the last 1 month? Medium duration debt has been the best performing. Credit risk always does well. So medium duration, why? Because the interest rates have fallen during the last 1 month or so. Now let us look at the debt performance over last 1 year. So credit risk has given 11% return. That's huge. And gilt with 10-year constant duration has given 10.6. So gilt funds have done really well over the last 1 year. And again, if you don't understand debt that much, you should seek some help. There are some very good mutual funds in debt as well, which give good returns. There are hybrid mutual funds which give good returns. There are conservative hybrid mutual funds. So there is a whole plethora of categories, which retail investors will not understand properly. So if that's why I keep on saying, if you don't understand these things, but as you've seen, the debt has also given 10-11% return over 1 year. So Why bother or be stuck with fixed deposits and all, which are giving you 6-7% returns? Why not explore debt mutual funds? So you need some sort of a hand holding. People a lot of times are worried about, no, I will go direct, and I will try to save that 0.6, 0.7%, and I will not take help of a mutual fund distributor. But over the long term, a market movement itself every day is 1 to 2%. So if your mutual fund distributor is giving you that value, additional value of hand holding, of telling you everything about the funds, this 0.6, 0.7% over a long period of time doesn't matter much, provided you're getting good value from your distributor. So that is where the role of a distributor comes in. And if there's a distributor like me who's very actively involved with all the clients, then clients are also very happy with the performance, and they don't mind going the regular mutual funds way. So that is how I help my clients build their portfolio. So debt is an important part of anyone's portfolio. It's just not about equities. And also debt also can be done in various ways. You can have hybrid funds which will have anywhere between 25% odd debt component. There are conservative hybrid funds which will have a higher allocation to debt, about 60-65% to debt. So there are various kind of hybrid instruments as well. And then there is a pure play debt. There are gilt funds, there are long duration, short duration funds, various types of fund depending on their liquid funds, overnight funds, arbitrage funds which have equity taxation. So there are various funds. You need the help of a specialist to decode all this. But as I was showing you that the debt funds have also given good returns. Now look at this 1 year return, 11%, 10%, 9.6% for medium duration, 9.2 for target maturity. Floaters has given about 8.9, banking and PSU 8.9, gilt 8.6, dynamic bonds are given 8.47. So they have given good returns over the last 1 year, and that is also part to do with the interest rates coming down. Now let us look at the international cues. One very interesting thing was Bitcoin made an all-time high. So let's open the chart of Bitcoin as well and see how Bitcoin has done. So this is the chart of Bitcoin. As you can see, over the last 1 year, it's just been up and away. So 117,000 per US dollar is mind-boggling. I don't do Bitcoins, I don't do crypto, so my knowledge is limited in this field, but it's something spectacular. And what it is also showing that somewhere people are losing trust in USD. It's basically US dollar going down, and that is getting manifested in the price of gold. As you can see, 33.55 over here. Silver 38.95. My God, silver has crossed 38 also now. So silver went up 4% last night. Wow, this is amazing. This is some move. Let us check silver chart as well. So look at silver, wow, look at this rally from March, where it was at 29, silver has crossed 39. Wow, it's superb. So silver has done well, Bitcoin is doing well. Let's see the other things. Now this is a worry. This is 4.95 US 30 years at 4. This is big worry. If this goes up, then our interest rates are going to not come down, because if this crosses 5.5, it had crossed earlier. If it crosses 5.5 30 years, then it's a problem. Similarly, US 10 years at 4.4. If it crosses 4.5, goes closer to 5, it's a big problem. Anywhere above 5.5 US interest rates will not go down. Then Fed will not have the window to cut any rates then, and it is going to be a big dampener. However, dollar index has also started to move up. Now it's 97.85. It had gone to 96. That's a big worry for us. If it crosses 100, it will make the last stop at 110. If it goes there, then it's a big problem for us. Nasdaq was okay, flattish. Brent is at 70, okay, no problem, and our currencies are 85, 82. But the real story is silver at 39 and Bitcoin at 117. So these are some huge movements that have happened. So that is the wrap on the weekly update. Markets are looking okay, slightly under pressure. FIIs have been selling. Let's see when that reverses. It's a buying opportunity now. If market falls 500 points, it'll be a better buying opportunity. Markets fall 1,000 points, it's going to be even better opportunity. So nothing to worry as of now, till the time we are holding 23,900. If we for some reason break 23,900 for the long term, still it will be a good opportunity to buy. But yes, then there will be short intermediate pain that we have to see, and we'll have to see the consolidation. That will also mean that Nifty was not able to take out 26,200, which was the last top for Nifty. So all this we will have to track closely. I will be tracking this closely and bringing the updates to you throughout the week. and how I see the market. So if you want those updates, you can follow me on Twitter, you can follow me on YouTube. And if anyone is interested in joining the WhatsApp group, they can again fill up the form which is there, and in that form they can say that they want to join my WhatsApp group. It's a very small WhatsApp group that I run, and I from time to time give the opportunity for people to join in. It's a good way of knowledge sharing. So if anyone is interested in that, they can fill up the form and write they just want to join the WhatsApp group. I'll add them to the group over there. Just write a small description about yourself, what you do, and that's it. So that's it from me now. If you like my content, please do subscribe to the channel, and I shall see you soon. And have a nice weekend, and trade well, be well, and take care. Bye bye.